Welcome back. This is Retirement News Online. So recent stock market volatility, which seems to be related in some way to trade wars and turmoil in Washington, has some investors fearful of a recession. Now, for most investors, this can be a good time to reevaluate their positions and plans. My guest is financial advisor and attorney Greg DuPont in Dublin, Ohio. And Greg, thanks for talking with us today. And given all the noise from Washington and where the market is currently, there is a lot of uncertainty, but I'm wondering why things aren't worse.
Well, Scott, this is the type of environment that really does test an investor's soul. I mean, we are on extended legs for a long-term bull market, and when we start seeing the news and all of the gyrations out of Washington, an investor is lost, and they are being fed every day a new high or a new low. And some of them, every time that there's a new quote-unquote low, it's panic season. And so the first thing that the investor needs to do is keep an eye on the big picture and not the day-to-day gyrations.
So it's been said that volatility isn't a problem, but actually just a feature of the markets. Now, this environment isn't a big problem for the younger, long-term investor. For those close to retirement, though, what should they be thinking?
Well, they really need to be thinking about whether or not this is something that is the trigger of a greater market correction. We cannot be complacent when we're at that point in our savings journey. When we are in our 30s and 40s, if the market does have a 10%, 20%, 30%, or even as we've seen 40% and more corrections over the years, you do have time to recover, but as you're approaching retirement, you just don't have that time to recover. So it does become a real problem for the investor as they're approaching their final stages of their accumulation journey, and they need to be sure that they are working with an advisor that is being sensitive to the market to make sure that they don't just ride it down to the bottom.
Greg, for those watching who are working with an advisor during this time, what questions should they be asking and what answers should they be looking for?
Yeah, well, the very pointed question they should be asking their advisor is, what is your plan if the market corrects 10, 15, 20% or more? And if the advisor is not able to give them a sound answer to that, then it's time for them to consider whether or not that advisor is right for them at this point in their life.
Greg, finally, it's pretty obvious the president cares about market performance, and he usually finds a way to avoid a total fall off. But let's just say we're guessing wrong here, and this becomes a global economic problem, and we head into recession. How should investors prepare for that?
Well, as much as the president does like to keep the stock market on a rise, because that is what drives part of this popularity. It takes more than one person to tango, as the saying goes, right? It takes two or more. And therein lies the conundrum that he's dealing with, because trade wars, they're trade partners, and they can't control what China will do. He can't control what the legislature will do. We can take some comfort in the fact that most of the trade stuff that's going on right now is unilateral and not permanent, as opposed to pull out legislation. But we're playing with fire, and we don't quite know where that might end up at.
That's advisor and attorney Greg DuPont in Dublin, Ohio. Thanks for watching Retirement News Online.